Good morning. This is Julie, J Auto Trading Strategies, and I'd like to go over the River of Gold trading strategy with you real quickly. But first, about myself, J Auto Trading Strategies develops BloodHound templates for NinjaTrader that use volatility-based techniques and price action. Um, I'm Julie, and this is a single-member LLC out of Texas. And the rules and risk disclosures for trading any of my strategies are on the website. And investors should definitely read these disclosures and be aware of all of the inherent risks that you can incur in trading. And the hypothetical performance disclaimer on the website indicates that no representation is being made that your account will or is likely to achieve any profits or losses similar to those shown from simulated data. There's a sharp difference between hypothetical performance results and the actual results subsequently achieved by any particular trading program. So with that said, here is the River of Gold, and it's a very simple concept. Really, it's when you're trading the value areas, which is a very common trading technique deployed by professional traders and hedge funds and prop shops. So this is value. I have it painted on the chart. The blue is the nighttime value, or the 24/7 value, and the yellow is the open outcry value area. I customize my value areas to assist me in making my trade decisions, as well as my volatility bands that will show me the volatility in the market and price action. I also have customized my stochastics to provide a visual representation of the previous swing highs on the chart. So when price makes a higher high, I'll get a hash line up on my stochastics indicator, like this green and green, so that if I see the next stochastic cross is much lower than my higher high, I know that this is going to be the sweet spot trade. And here's my overall River of Gold trades anyway, but I also got a sweet spot trade out of it, right? Divergence, higher high, and divergence. So when you're in a trading system, you can discretionarily know that one location is a little bit more favorable than others and pile on, right? That's called mosh pit. The strategy trades above or below value. It's just a simple technique that will take trades trying to expand that range. If you're in a trade and this momentum indicator is wonderful, you see that there's momentum coming back down, and you've got stochastic crossing KXD on a much lower momentum. You can change the software to a bar direction short and hit those going back into the value area or that opposite band. So the software is very flexible on the fly. You can be auto trading or discretionarily trading and just flip between these strategies and learn to rely on them. As always, the stop is behind, a couple of ticks behind that pivot, and you go to your entry location, and then you use that as a first target. And if you're like in the middle of the range of that first target, you look for another level to trade to. Okay, that's how I get my targets. So I take my first one as just one-on-one, and then I'll look to another target to see if it's something close by that I can extend that out. Okay. Sometimes though, if I see that, obviously price is under the 20, the stochastic, excuse me, I said price, I mean the stochastic, and price is at an area, a known value area, you should just probably take that trade off if you were in it anyway. And then, of course, you would want to take the trade back out of value because that's the system. So you could get the the 1-2 and actually the 1-2-3, because you could go back short here. So, but this is the strategy in a nutshell for the River of Gold. And of course, you can incorporate that with your own support resistance trading methodology, understanding when price moves. How do you determine if price is going to be expanding a range, or what the current 10-day range period is? So you have a little bit of homework to do to get your benchmarks and understand the normal trading environment that could be anticipated. So then there's strategies to trade inside the range, inside the value. That can just be done with bar direction. And it will trade up and down. So when you get in a range, just put it on bar direction. Deciding if you have a bias for the day, like your higher time frame trend, weekly, daily, 60, 15 is green, then only hit these green ones, right? Pick one direction. You don't have to trade both up and down. But if you see that you're extended at a range and you get a signal, you might as well hop on it, and scalp something out of that, because you know that you're just ranging. So anywho, that's trading 101 with the River of Gold. I've got some other solvers on here, and I'll go through those in another video. Thank you so much.